Forget stocks. Here's why you should be investing in tangible assets. With today's economy, what's going on right now is absolutely crazy. We're seeing some of the most volatile times in our entire lives. And the reason is that we've got a lot going on globally, and we're still trying to recover from a global pandemic. And so that's giving us some very, very interesting market conditions. If you've been following the stock market, you may have heard terms such as bear market, or we're in a downturn, or we're in a recession. That just basically means that the stock market's been going down. And the truth is that mostly the people who are heavily invested in the stock market, those are the people that are really, really being affected by what's going on with stocks. And the truth is that if you don't have much exposure to the stock market, like I personally don't, I don't really feel the effects of the stock market. So whether it goes up or whether it goes down, it doesn't really affect me. And that's because all my money is in alternative assets. And so that can be anything from like houses or gold or cryptocurrency or exotic cars or luxury watches, yachts, right? These are all alternative assets, alternative investments. People do not traditionally see those things as investments. Now, you may have even grown up with your parents telling you, hey, don't buy an expensive car because it's not an investment. Well, what if you're buying collector's cars? Or what if you're buying a car that you predict is going to be a collector's car in the future and you're actually making money on it? There's so many people out there that are doing exactly that, and they do not feel the effect of the stock market as much because they're not so heavily exposed to the stock market. One interesting thing about the stock market that I've seen in my life is there seems to be a consistent bullish pressure in the stock market. So we can start to think about, okay, why would something like that happen? And there's a few reasons why we could see a consistent bullish pressure in the stock market. Number one, think about how all the large companies are paying their people. They pay their people and then they're like, hey, if you want to invest into a 401k, we'll actually match your 401k contributions. In fact, we'll double them. There's a lot of companies that are either matching or doubling 401k contributions up to a certain percentage, of course. And there are some companies that will actually contribute a whole lot to 401ks for their employees, which is nice and it's good. And the thing is that it just grows your 401k and your retirement account and your portfolio. However, think about what that does to the stock market. That means that every 1st and every 15th of the month, or maybe once a month, right? There's consistent buying pressure because all these companies are contributing, number one, their employee accounts. They're also matching. And so all of those purchases are happening in the stock market, whether they're investing into indexes or funds or just individual stocks. There's a lot of bullish pressure that's happening in the stock market, and they just keep buying and buying and buying and buying. And what that does is it just eventually drives the price up and up and up. And so that's how we keep seeing all-time highs. Now, right now we're in a recession, so we're not at all-time highs right now, but we recently were at all-time highs in the stock market. So that's one reason why the stock market would go up. Another reason is you have to understand what's going on globally as well as with the US dollar. The US dollar still maintains its reign as one of the top currencies of the world. However, it has lost a lot of power and a lot of strength as a currency itself. And so this currency is losing strength because of a couple different factors. And the biggest one is that we're just printing so much of it. We're printing so much of the US dollar that it's becoming much less valuable than it was years ago. And so that's a unique situation that's creating an interesting dynamic in the stock market, because let's say we had a stock that was worth $100. And we believe that this 0.00001% of, let's say, Apple or Microsoft or Amazon is worth $100, right? Whatever that number may be, we believe that that share of the company, that little tiny portion of the company, is worth $100 or maybe $1,000. This is worth $100. I'm gonna buy my little share for $100 and I'm gonna hold it forever. The truth is that these companies, they are on a trajectory of growth. They're growing their business, they're expanding, they're becoming bigger and more powerful and more efficient and wealthier. Let's say you own that little piece of Amazon. And so now Amazon keeps growing and growing and growing. So that's naturally going to drive the stock price up. And because Amazon is such a large factor in the stock market, it's actually probably going to raise the prices of other stocks that are in related sectors. And not just because the value of Amazon is rising, but because it's in an industry that affects many other industries. So for example, if UPS services Amazon, and Amazon just keeps expanding and growing and creating more demand for delivery services, it's going to start growing the delivery services stock, right? UPS stock. It's going to affect a lot more sectors than just itself. So all these sectors begin growing just because Amazon is growing. And so it's pushing the economy up. It's creating a positive economic flow that's pushing the market higher and higher and higher. Another thing to consider is that we own that little portion of Amazon. Let's think about the value of that portion of the company. Assuming the company doesn't even grow, it doesn't even have to grow for this to happen, but because we have inflationary pressure on the dollar, we still own 0.00001% of Amazon. And so let's say that portion of Amazon that we own, we just keep it and we hold on to it, but the dollar keeps going down in value. And so as the dollar becomes weaker and weaker and weaker, it's going to take more dollars to buy that piece of Amazon. Even though the value of Amazon didn't change, you still would most likely be able to sell your portion of that company for a higher price. And the reason you'd be able to do that is because, again, the dollar has been decreasing in value. Those are the different things that could affect how the stock market performs. Now, as far as we've seen the market in its entire existence, it has gone up and up and up and higher, and it's always breaking the previous highs. It's always creating new highs. So what can we deduce from that information? Well, the likelihood of the stock market continuing to go up is actually pretty high. If we're long-term investors and we want to just park our money somewhere and not even pay attention to it, the stock market may be a good vehicle to do that. However, in my opinion, a better investment is actually physical assets. And so if we can get a hold of physical assets, whether it's real estate or exotic cars or yachts or airplanes, anything like that, and we buy something that's in a rare location, maybe on an exclusive beach where there's only 20 houses, we can buy that house and we can just hold on to it and we're just not gonna let it go. If we buy and hold that in 10 years, 20 years, 30 years, somebody's gonna come along and they're gonna be like, hey, you know, I really want to live on that beach and I don't care how much I have to pay to buy a house here. The 19 other guys aren't selling their house, but maybe you'd consider it because you bought it for maybe 10 million or 20 million and this guy's offering you 50 million. You easily could have doubled or tripled your money on that specific house just by buying in an area that's in high demand, an area that's irreplaceable. You can't add more real estate to it. You have to have some sort of like restrictions. You have some restrictions geographically that are causing this area specifically to go up in value. That's a really great way to look at these assets because they're not easily replaceable. And if they're not easily replaceable, that means that the market value is probably going to go up, assuming demand continues to rise or even stays the same. And also considering the inflationary effect on the US dollar, it's probably going to go up in the value of US dollars anyways. All right, guys, hopefully this makes sense on why you should hold physical assets instead of stocks, and I'll see you all in the next video.